Hello, hello, hello. Welcome to August Market Update with Jonathan. Really excited about this market update. There's so many things flying around in the news from the foreclosure happening with the moratoriums being over that happened last month to really people are just wondering what the heck is going on in this marketplace as so many things are happening in this world. So I'm here to really help you guys understand what the market is doing, give you the real update of what's happening and not fluff it up with what you might see in the news or with headlines. Because remember, headlines are really meant to sell and to terrify. They're not here to clarify what you need to know in this market. So that's why I'm here to update you guys of what is going on. So by far, number one question I get asked all the time, are we in a housing bubble? Jonathan, when is this housing market gonna collapse? I don't wanna sell my home right now. I don't want to buy my home until the market crashes. There's going to be so many foreclosures. I'm just waiting for the prices to come down, yada, yada, yada. And all I hear is this is a housing bubble. I can tell you it is absolutely not a housing bubble. It's truly a supply and demand issue. Again, it's a supply and demand issue. We've talked about it in previous market updates. We understand that, hey, the inventory just is non-existent. Interest rates are at an all-time low still for mortgages. Again, previous market crash, there was high interest rates, actually lots of inventory. And so this market has nothing to do with that. It's truly a supply and demand issue. So where does this supply and demand issue come from? It comes from the long-term decline in single family construction. And that's really what it comes down to. You can see this here on this chart, and this is very telling of this, is that single family homes they were not being built at a record pace or even really at a big pace at all right after the crash. So from 2010 to 2020, really 13 consecutive years has been below average units completed in the housing market. The housing construction end has not kept up with population demands that are going on in this market. So that is why you're seeing a huge pent up demand in inventory because we have not had that increase in home construction really over the last 10 years. Well, 10 plus years, you can see it from this chart. You can see in the 70s, the 80s, they're actually building more homes than what they are building right now in our marketplace. And that even today, as we speak, is getting better. But at the same time, it's all over the place because of cost of construction, all of the constraints that the coronavirus has created with supply chains. It's really eaten into a slowdown of some of the new construction as well. So it's an interesting time that we're in, but it is a true supply and demand period from all this pent up demand that's happened. And just to put it into perspective, I'm going to talk about the next thing where they talk about the bubble is the foreclosures. And I really want to bring you a history of this foreclosure. If everybody remembers last time this happened with 2008, 2009, the market crashed. Again, there was lots of inventory. To put that in perspective, in our local market, we had over 5,000 homes on the market at that time. Right now, we're running around 800 homes actively on the market, just to put that in perspective. But here's another big perspective, is between 2006 and 2014, about 9.3 million households went through foreclosure. They had to give up their house in some sort of manner. And you can see they're 9.3 million. That's the number you want to focus on. And why is that relevant today? Because everybody's thinking that because of all of the stop payments on mortgages, everybody was allowed to stay in their house. The government helped out during that time. You can see here the number of mortgages that are in active forbearance is under 2 million. So when we talk about a market crash, one, it's not 9 million. It's under 2 million right now that are truly in forbearance, 1.86 million. And there's a big difference between that and 9 million when you talk about that. That's why, again, it's a true supply and demand issue. And then when you break down this 1.86 million, you can really see what the true data looks like, that many, many people are coming out of forbearance. Actually, over 80% of people are coming out of forbearance in some sort of way. They're either doing a loan modification, they're doing a loan deferral, they've made up their difference in the payments, and they've worked out something with the bank. Right now, only about a little over 17% of that 1.86 million are truly still in trouble. So what that leaves us with is less than around 300,000 homes that are truly in a trouble position, meaning that if these homes all hit the market, they're not going to flood the inventory of homes that are out there. They're not going to create this huge gap, or it's not going to minimize the gap between supply and demand. So you're not going to see a market crash at all. And you can actually see this from one of the heads of, well, he's the founder of Zelman Associates, which is a big data company. The likelihood of us having a foreclosure crisis again is about 0%. Again, we are not in a housing bubble. We are not in trouble, and things are actually going up still. So what is happening right now? You're starting to see a softening of the market. What I mean by softening of the market is, imagine you're driving down the highway and you're going above the speed limit, and you start to approach a police officer that's on the side of the road. Well, guess what? Your natural inclination is you're going to slow down. And that's what's happening right now. So you can see here buyer traffic. I know you can't really see the numbers that are associated, but just say dark blue is buyer traffic was very heavy. Light blue means that it's still heavy, but it's not as heavy. So you can see here over the months of April, May, and June, that's in the bottom right-hand quarter, really Q2 traffic, buyers were starting to slow down of seeing homes. They were just getting fatigued. They were sick of going out there all the time, looking at very little inventory. They were just tired of that whole entire process. You can see that showings really started to decline a little bit. But when I say a little bit, that reference of driving down the highway and then slowing down, you're still going the speed limit. You're still going at a very good pace. And that's exactly what this market is doing. It is not skyrocketing right now, but it is going at a very good pace, and in line with a lot of things. And you can actually see that in this chart. So this is showing time. This is data of all of the home showings that are happening right now in the state of Pennsylvania. And it's a little hard to see that light purple line because it's buried below this orange line, but that's the actual line of 2019 is the light purple line that you can see right here. So 2019 numbers compared to 2021 numbers. So 2020, yes, last year, there was a big climb of showing activity. Why? Because you can see here during the pandemic, there was a huge pent up demand, and getting out of that, there's a huge amount of showings. But we are right on pace for 2019 of what a market looks like. You can see here we're coming up on Labor Day, coming up this weekend, and there's going to be a dip in showings. Again, that's what these dips are for the most part, are holidays. And there's usually a dip in showing activity. And you can see that it's going right along that same trend line of 2019. So not much has changed from the showing end. It's still competing with 2019 numbers. Again, though, when you're flying down the highway, just like we were in 2020, you slow down to a normal market, it's gonna feel like that the market is crashing. It's gonna feel like things have slowed down, but in reality, they haven't. They're just getting back into a more normal cyclical time that you normally see in real estate. So you can see that in this chart. When you really put things into perspective, we are still in a heavy seller's market. You're starting to see things climb back up a little bit, but again, we're so deep into a seller's market here, that climb is going to take a while. So you're gonna see it's still a great time to sell. It's actually still a great time to buy, and I'll get into that in a future slide here. But it is still an incredible seller's market. You're still gonna get multiple offers on properties. You're still gonna see tons of showing activity. It's just not gonna have 30 offers on the property. You might have 8 or 10 offers on the property. So keep in mind, it is still a seller's market out there. So what's happening locally? You can see here right now, percent of list price received. We are still at over 102% on average of asking price. So on average, homes are being bought up for more than the listed price in our local market. Average sales price has gone up 18% year over year. So right now we're floating at about a 311% average sales price in the month of July in our local market. Last year we were at about 284. So you can see the big increase there year to date right now. Inventory of homes available. You can see here it's still down compared to last year. Last year around this time we were at 1,092. Right now we're hovering around 895. As of this morning, it was like about 815, 820. But you can see here that inventory is starting to creep back up a little bit. We're still at record lows with inventory, but you can see that we're starting to see that fall. And what I mean by fall is the time of year. We're starting to see fall and winter where inventory starts to creep up a little bit. And you're starting to see that right now. But again, we're still at record lows, which creates that huge seller's market. And new listings, we're up. We're at 1,089 new listings. Last year, we brought in about 1,095 listings during that same time period. But you can see here, year to date, listings are starting to climb back onto the market. So why do I say, hey, Jonathan, yeah, we're starting, it's a huge seller's market, but why would I even consider buying in a seller's market? Why don't I just wait until the prices crash? Why don't I wait until prices come down? Because you just said that it's not going to crash. Well, here's why. It's because of your purchasing power that you have right now. Put into perspective, back in 2006, 2007, interest rates were 6%, 7%, not even on this chart that you see in front of you. Interest rates were much higher, and yet sales prices were right around the same, if not a little bit less than what they are right now. Sales prices right now are at an all-time high, 30-year high. It's incredible what people are getting for their house right now. But why would you buy? It's because the interest rates of mortgages are still at record lows. Most interest rates on mortgages are in the low threes, high twos that I'm seeing right now. And you can see here that your monthly payment, because of what the interest rates are very low. And the crazy thing is, even if your price of your home would decline, and I'm not saying it is, because it's actually going to continue to increase. That's what we're seeing on across the board. And you actually see that on my market updates from last month and the previous month. I didn't want to do that again just because you've heard that already and it has not changed. But you see here that, hey, if the interest rates go up and my price of my home goes down, that's when you're still paying actually more than what you would be paying now. And that's the crazy thing. You could be buying a home at $200,000, have a principal and interest payment of $816. And yet, if you bought that same house for $180,000 at 3.75% interest rate, your monthly payment would actually be more. It'd be $834 because of that interest rate is higher when prices start to go down. So this just goes to show, like, don't overthink it. Yes, it's still a little bit harder to find inventory. Inventory is starting to creep back up from a buyer's perspective, so you will have more options to see. But at the same time, is don't wait for the prices come down. One, they're not going to, and then two, you could just be waiting for something and realize that, hey, you might actually be paying more per month than if you pull the trigger on something right now that you know fits your wants and your needs. So always go off your wants and your needs of what you need to buy now, because that's what you should really be concerned about is, hey, does this house fit my wants and needs? Because I know I'm still going to get a good deal, even though the prices seem like they're inflated, even though they're really not, because of it's a supply and demand going on right now. So reach out to us. Obviously, you can see here a little bit about us, DLP Realty. We've been ranked #1 in the state of Pennsylvania, really for the last 9 years here, and number 12 in the country. We sell a lot of homes. We help a lot of people, and that's a big difference. Is we've sold thousands, 10,000+ homes, so we know what to look for. That's why we're able to give you the information that you need on these market updates of what you need, because we can go in, see what your situation is, and advise you from there, give you all your options to sell, allow you to understand what that buyer's market looks like right now in order for you to be comfortable with your purchase. So here's my service announcement. Don't wait to sell your house. If you're waiting for something to happen with the market, just be aware, hey, it's not. things are continuing to climb. Things are starting to go. But I could tell you from experience, wintertime, springtime, they're the perfect times to sell. It's the best time to sell. One, in the wintertime, you don't have as much competition out there, and buyers will gobble your house up. You will get multiple offers on it. Springtime, same exact thing. You're gonna have a lot of people that are already in the mood to go buy, and you're gonna see high success. So don't wait to sell your house. Don't wait for that supposed market crash, because again, 0% chance is going to happen right now with that. So anything you need to know, you can access more of these market updates. Go to dlprealty.com. You can get access to find out what you would actually get on average of what your market is doing for your sales prices. So go there, put in your address. Really cool things there. You'll see really overall what the market is doing in that little exercise. And then what we can do is we can send out an agent to your house, no obligation, that you can understand what all your options are to sell your home and or buy. And we can walk you through that whole entire process, no obligation at all. And you can get all the information that you need for that. So go to dlprealty.com, and I will catch you guys next month in September for the next market update. And we'll do like an end of quarter market update and recap what everything happened in the last quarter. So looking forward to it, and see you guys in September.